Hi, welcome to the Market Alert for Wednesday, the 27th of February 2019. Starting off with the pound yesterday, we see that prices moved higher, albeit on fresh air. Not a lot of buying going on here. Just the news that May is going to put a vote to the delaying of Article 50, and the way it's going on, it looks like I wouldn't be at all surprised if we don't end up with some sort of second referendum. Anything they can do to delay the inevitable, they will do. One thing that I read this morning was absolutely fascinating. Let me just show you this. If you get a chance, have a look at this. It's Bubble 3, No Way Out. And it's about the printing of money and how much debt is actually on the central bank's balance sheets. Absolutely fascinating. And this is the first chart I've managed to find of the European Central Bank balance. This is in a percentage of GDP, which is 40% of the whole European GDP, which is not massive by any means. But you can see here the important thing is how the printing of money in Europe is what is keeping it afloat. And as I've said many times before, I'm not interested in the political side. It's the grand experiment of the euro that I find absolutely fascinating, by overlaying a one interest rate over the whole of all of these individual countries and cultures, and also what they produce and don't produce. And you can see the impact here that it isn't working because they're having to keep printing and printing to keep this thing alive. And just to prove this, as it says here, adamant that is, until recently, thanks to weakening inflation and continuing anemic growth on the continent, rate hikes are off the table. Soon to be outgoing ECB Emperor and Chief Super Mario Draghi is already making noises about restarting quantitative easing program rather than reversing it as its American counterpart, which the Fed has done. They've tried, but that's not working either. We saw what happened to the stock market. This is despite the fact that the ECB's balance sheet, or a stash of the European bonds bought with pseudo euros, printing fresh air, is an outrageous 40% of GDP versus only about 20% of the case of the Fed balance sheet to GDP. So it's not working. The Great Recession has not been staved off by printing trillions of euros to hold of the European Union together. It's a grand experiment by the elite, which is falling apart internally. It doesn't need Brexit. And this is what I keep saying to people, that forget the politics, look at the numbers. It's a real problem. And plus, their Italian banks are in a mess again. There's one Italian bank whose name escapes me that is now under the ECB control. It's not working out too well, that's for sure. So yeah, this is why we saw the pound move higher yesterday, because Mrs. May is capitulating to... and eventually will capitulate to a second referendum, in my opinion. Never mind anything else. I just don't see us leaving easily. And it'll be a case of staying in there while the rest of the financial European Union starts to fall apart. It's as simple as that, really. We have a global slowdown going on in the background. Nobody will acknowledge it in the mainstream media. They just won't acknowledge anything unless it's the stock market rising, which we spoke about in last week's Market Alert. As long as the stock market's moving higher, the people will be happy, the masses will be happy. They won't talk about the figures, they only talk about politics. And politics is absolutely and utterly pointless and boring without you have some way of funding whatever it is that you want to promise the people. But anyway, rant over. So here we see the market moving higher. We had a 76% retracement down to this level, and then prices moved higher, double top there, and then overnight we're seeing prices moving sideways to lower there. Daily chart shows the market through the 132.21, which we drew in yesterday, and it's a case of whether the market can hold it here. All we need is some other news to say that May's changed her mind, and we'll see prices move lower again. The only news today is Powell is testifying at 3 p.m. Once again. So keep an eye on that one. For the Dow, it didn't really move it yesterday, as you can see here. The market moved higher. We've got a retracement as we've been having for a while now. If I just mark this up, you will see what I mean. Just get rid of this, and then from we've got one here to start with. There's your first 76%, and then from here to here you'll see 76% also in this area here as well. As soon as the market comes back, we're off, and we start moving again once we get above the 200 bar moving average. Get the market up. That's the key here. Get the market up. And unfortunately, the market starts to move lower. And apparently there was a problem on the CME yesterday as well. Everything stopped trading for a while. And again, a really good article on Zero Hedge about this, and a very good comment as well, actually. Let me just, again, to reiterate this thing about keeping the stock market. Let me just find you this comment. I thought it was highly amusing. So here's the article. All Globex futures trading is halted, CME aware. Well, of course they're aware. It's probably like the classic case in times gone by where they've had a massive sell order at the market, and all of a sudden there are technical difficulties which they allude to once more in here. But there was a comment or a tweet that was sent out, obviously, you know, Mickey taking about it's the Russians and all the rest of it. This one here, it says, finally, as one veteran trader scoffed, now's the perfect time for India to drop a nuke on Pakistan, as it's only a matter to the world if the S&P drops. So it wouldn't matter if India dropped a nuke on Pakistan. Nobody would really care as long as the stock market stays on the highs, because that's how it's become, and that's what we've spoken about many times, or on a daily basis in the alert. That's what it's all about. So yeah, some interesting things around today, and overnight. The Dow back below the 200 bar moving average. Did manage to peak above it, but was hit immediately by some selling, sent it back lower. Some buying pressure in there at the moment, and prices trying to recoup. And if we look at the daily chart, we'll see that yesterday was down, but we didn't come down to the 76% retracement that we've drawn in. This market is still on the long side. And then finally, we've got Bitcoin. Nothing to say. The market is now going into that sort of sideways move once more, as I spoke about in greater detail yesterday. So I won't labour the point with regards to this today, until something actually happens to give us something to talk about. Okay, that will do it for this one. Keep an eye on Powell at 3 p.m. if you're in the Dow, and otherwise news on Brexit will move the pound. With that, as ever, thanks for watching. See you in the next.